lot of news coming from the Chinese market. There are a lot of news coming from the European markets, the Middle East market. Your views about the current situation of the Chinese financial industry?
Chinese economy is rather weak recently.
Current anxiety points, the leverage points that the global scenario is facing, the fund managers are facing in the global perspective. Tell us about the current role of the Chinese investments and investors in a global perspective.
All right. Indeed, the Chinese investments and also the Chinese investors are basically not that active recently in the global market. The key reason is that, as all of us know, that renminbi is not really free float. And if you are having a kind of investment opportunities offshore, you probably need to have the Ministry of Foreign Exchange approval. And recently, what I mean is the past couple of years, the Foreign Exchange Ministry is really conservative in getting the Chinese investments and also the Chinese monies offshore. The key reason, as we all know, that the Chinese economy recently is not that good, and therefore the government, no matter whether it's the central government or the local government, they are more encouraging the money to stay and invest onshore rather than to go offshore. Therefore, this is a very key consideration that we don't see too much foreign investment as done by the Chinese. Another key reason is because of the political consideration, where we see that recently the political tension between China and other countries are a bit strong. And therefore, when some of the investments that needs the approvals from the government, no matter whether it's from the foreign exchange or if it is from any of the government monies through the state-owned enterprises going overseas, basically is very difficult. Therefore, we see that apart from the investment in the developing countries, in developed countries like in the States, England, Canada, etc., which are getting much less recently. On the other hand, we see that because of what I've just said about the political consideration, there are more investments in the One Belt, One Road related countries, where, as we all know, this is something being encouraged by China, and also in relation to investments in these countries, they are more resources related, and also for the mutual benefits of China as well as for respective countries. Therefore, we see that for that kind of investments is more dominant in recent years. What I've just talked about are more about the corporate investment or the big investments. Whilst for the individual person investments, for example, the citizens in China, it's really getting difficult, as I've just said, about the foreign exchange restrictions, where they are quite difficult to transfer the money offshore to invest in the foreign markets. Therefore, we see that no matter whether it's insurance, no matter whether it's investments in the US stocks in the other country or financial markets, they're getting less and less recently. So we only see those money that have already got offshore from the Chinese to invest in these markets, whilst there are no new money from China in the past couple of years. All right. As I've just said, Chinese economy is rather weak recently, and some of the industries in China, like real estate and steel, resources, basically they are suffered from quite significant impacts recently. Therefore, many of the bank loans where they're lending to respective industries, as we not just only China, but all over the world. Real estate, basically, they cover quite a significant portfolios of the bank loans. So for respective industries, they are basically, say, covering quite a strong portfolio of respective banks, particularly for the SOE banks and the local SOE banks. Therefore, China needs to be very cautious in managing respective industries to make sure the financial industry would not be collapsed or would not be significantly affected by the respective low performance or the poor performance of respective industries. Many of the local governments, we also see them raising debts or by issuing bonds in order to support the growth and also the, say, daily usages of respective provinces or cities. Whilst we also see that recently there are some defaults in respective bonds, which also affects the confidence of investors as well as the Chinese nationals in the financial industry. Definitely one very key reason, not just only for China, but also for other countries, whilst it is even stronger in China, is the effects from pandemic. As we see that for the past, say, 12 months, many countries have already reopened their doors, whilst China is still undergoing a closed door policy, where the overall economy is not being, caught up by doing international trade and also international businesses. So they are more relying on the domestic markets, where domestic consumption and also the domestic GDP is not growing in that large extent. Therefore, we see that the financial industry is still undergoing some kind of, effect by this perspective. Nevertheless, we should trust the Chinese government, as they should have plans and also methods to cope with the current situations to maintain a stable and healthy financial industry, as that is very critical to have a stable for maintaining the stability of the country.
Okay, all right. Now, I think you just mentioned about the domestic scenario relating to the international scenario that's going on right now. Edith, being an international financial group, would also like to know, quickly, just tell me about the current anxiety points, the leverage points that the global scenario is facing, the fund managers are facing in the global perspective.
For the fund managers, indeed, they are really facing a very big challenge recently, as it is not easy to raise money.
Right.
Many of the investors are very conservative in their investments, particularly for those funds that are being more long-term, for those that are having a couple of years of maturity, where they are very, very difficult in raising monies. And another key problem is we see that the recent performance of many funds are not that satisfactory, and many of them are dropped a lot and even default, which makes many of the fund managers are being sued because of the poor performance or the default of their respective funds. Another very key point is many of the investments, particularly for the long-term investments of respective funds, at the time of exit, say during the IPO, we see that the IPO market is also very weak generally over the globe. And many of the IPO, when they are, say, trading in the first day, they drop below the IPO price, which makes the fund managers not very, say, good in terms of the overall performances and also the track record in attracting, additional monies for the funds. Therefore, particularly in Asia, we see that a couple of funds are closing down as well, because they can't raise money, or because they have many of the market effect, as I've just mentioned about. So this is something which I see recently being quite, challenging for the market. But I anticipate this is something being short term, and in the long term, I would see that now we are at the bottom of the market, and there are many attractive and also cheap assets that we are able to invest into, and therefore some of the investors, we also see that they are getting more aggressive recently, or not in terms of aggressive, as I said, but in terms of more open in looking into investment opportunities and participate in some of the funds. Just like for Hong Kong, Hang Seng Index is dropped a lot, and many of the pre-IPO projects, the issuers are getting more realistic in lowering their prices when attracting investors. So it's a kind of a supply and demand issue, which I would say that the market is picking up, and the fund businesses and the fund managers are, already at the bottom of the market, and they should be having a good future going forward.
Right. And in that same set of schemes, I would like you to tell me about Edit Financial Group's role in tackling this, current market gloom. There is a lot of news coming from the Chinese market. There are a lot of news coming from the European markets, the Middle East market, about that incoming economic gloom. So, is there any plan that is set from Edit Financial Group? Is there anything measures taken?
Okay, thanks for the question. Indeed, as per my feedbacks about the previous questions, I basically share the fact that the market is rather challenging currently. So for Edit Financial, we are more trying to differentiate ourselves from other players in the market to provide more diversified and also more interesting products and services. So in addition to many of the traditional investment products that we have, and no matter whether we are selling at the current stage or we are planning to sell at a future stage, we're also starting to make our own funds and products, which are more attractive for the investors, as we are more picking those industries and also that assets being more, attractive for investors going forward. In terms of the trading system, basically, our trading system and many of our technology used are developed by our own Fintech team, which has around 150 people. We are one of the very few houses in Hong Kong that developed our own trading platform, and are the systems that are specifically used for the securities companies' operations. We are basically using this system ourselves as a kind of demo, and we are targeting to sell all our systems that we have developed to the current market players, like security houses, where it would help them a lot in the sense of they don't need to develop their own system. They can just use our own system in terms of white label, for example, our app, and then they would have a very comprehensive trading system immediately. So this is something that we are planning in terms of doing our businesses in coping with the current investment challenges, and as well as what we are planning in terms of selling our trading systems.
Right. And could you share a bit? We have been very curious to know about your AI-powered smart investment tools. Can you share a bit about that itself?
Well, AI, as we all know, is very commonly used in current securities markets as well as the financial market. As previously, say around a decade ago, many of our works are doing by our eyeballs. We are basically monitoring the share price. We are basically doing a trade ourselves, having a big team of people, 24 hours, particularly for doing the commodities businesses, where we need to use a big team, using all the eyeballs, getting very tiring in doing all our jobs. But now, as we see for the past decade, many of the businesses or many of the trading systems many of the monitoring are using AIs. And this is something that we are developing ourselves as well. And we need to have, for example, many of the trades, we are using algos. We develop our own systems in order to monitor respective trades. So, for example, like risk management, if your portfolio have thousands of companies, you can't have the risk managers to say look at the share price every day and also do the margin call every day or every hour. So we need to do that by AI. For example, when we are doing the commodities trading, as I said, we are using AI, and also say for investment banking, we for example, at the stabilization stage, we just did a deal recently where we are the stabilization agent. We also need to use AI basically to monitor the share price in terms of the buying and selling. So AI is quite commonly used in the current financial market.
Right. And at the same sense, we have also heard about Edit One app.
Right.
The investment app that we have developed. Can you just share a few bits about the evolution that it took, how it started, and right now at what status it is right now?
All right. Edit One is also a very unique system that is developed by our Fintech team. It is a kind of trading app, which is, as I said, for the Edit customers using the app to do the trading. And it is also a very important showcase of our fintech business to the other market players, that we are having this Edit One, we are having a very successful Edit One that attracts so many investors using retail investors using our platform. And therefore, if you want to do something the same, you just buy our Edit One system and then implement white label in your securities house. So our app is very successful and also very user-friendly. And it can do many, it is basically a one-stop shop for the retail investors in doing the investment in various financial products like stocks, Hong Kong stocks and US stocks, foreign exchange, futures, and also funds. We are also trying to put in other, say, products onto the platform to make sure that it is being a one-stop shop where investors, retail investors, if they want to trade anything, they can trade it online very easily upon using the system. Where, as I said, our key differentiation is that the system is developed by ourselves, where all the maintenance and also all the upgrades are done by our own staff. Currently, the Edit One, we have more than 500,000 registered users, and we have around 100,000 more active users among that 500,000, which demonstrates that our app is quite, accommodative and convenient for the retail user. We see that the virtual assets, for example, cryptocurrency, is going down. It's going through ups and downs recently, and we will all see that the Bitcoin price, etc., are going just like a roller coaster these days. But we also see that why the cryptocurrency or the virtual assets are being very welcomed by many of them, say, users and also countries as well as investors, as we see that for many countries being more unstable or being the developed countries, the virtual assets are being more active. For example, we see that recently Russia, Ukraine, they have more users in cryptocurrencies, in virtual assets, as they more trust about virtual assets than their own currencies. For developing countries like Vietnam, Cambodia, where politically they are less stable, people are also more, say, welcome or more open to use virtual assets. And one key reason why the virtual assets are being that welcome by the market is that it is basically not as stringently regulated, comparing with other investment products like stocks, futures, etc. So many of the investors and also the players and also for the asset managers, they are basically more like to go into this industry or using this product, as there are lots of flexibilities and lots of creativity. Therefore, we see that many of the bulge brackets houses like Morgan Stanley, Goldman, JP Morgan, they are also developing their own teams and putting in resources and efforts on developing their virtual asset management businesses. Whilst on another hand, we see that China is being more receptive in doing virtual assets. Although that many of the giant companies in China like Alibaba or Tencent, they all announced that they want to invest and develop their virtual assets business. Whilst I'm not really sure about the key reason, but we see that China is very conservative in the virtual assets. Therefore, as a question is that virtual assets in Asia, in some of the countries, they should have lots of opportunities. In China, is yes or no, as they are still struggling about how to look into their virtual assets. Around the globe, as I said, there are many players and also many conservative players. Previously, like investment banks, they are putting in lots of resources in developing their own teams. For Chinese markets, China was indeed a key country for us when we started developing our online businesses, as our key businesses previously was on online brokerage business, where last year there is a significant change on the Chinese policy in allowing the offshore financial service providers to provide services in mainland, and therefore we need to change our game plan, as that is a no-go going forward short term. Therefore, we started focusing more offline and also the institutional business in China. For example, investment banking, as well as selling our Fintech products in China for the Chinese companies. Globally, we have a subsidiary in the States, in the United States, and we also intend to extend our arms to other markets. In the States, we have comprehensive retail and also institutional businesses licenses as well. And recently, 2 weeks ago, we have completed a US IPO where we ourselves is a stabilization agent as well. So that was our first deal in the US IPO, and we are expecting to grow that end of business going forward. And we are also trying to
Right. So in today's global scenario where the fintech industry is expanding all across the world, I would like to know what is your scenario on a closing note. What is your scenario on the future of the fintech industry? Where do you see this fintech industry growing towards?
All right. As indeed Edit, we have put in quite lots of resources in building up our fintech team, and also we have spent lots of monies in the R&Ds of the fintech team for the past couple of years. Whilst indeed it is quite tricky for fintech businesses, as many houses are saying that they are fintech. They are doing fintech. Whilst, as I've just said, what is the real fintech is those companies that are willing to look at this as a long-term investments, spend the money in the R&Ds, and to provide good products for the market users. For example, the systems that we are currently using, and that is exactly a system we are planning to implement to the market, is something that we have developed for more than 4 years and involved more than US $50 million investments. So it is quite a significant investment where we anticipate the market would be very welcome and also would find that very useful. Some countries, we see that they are more looking into fintech long term. They are more willing to invest the country in long term. For example, the Greater Bay region in China, to some extent, it is focusing and developing in the sense of encouraging the fintech development as well as the other technology-related, scientific-related developments. So they're providing some kinds of ecosystem for the fintech companies to develop themselves. However, there are lots of challenges as well, as we see that there are lack of expertise in fintech over the globe. There are many average level people, whilst for those people that we really need in fintech, as I said, fintech is not doing or developing the products by themselves, closed door.
Yeah.
Only knowing the technology. They should know what the market needs. They should know, say for example, our fintech team, they should be very, very familiar with what the securities market needs and what are in shortage. So the fintech people should have, say, expertise and knowledge in addition to the technology that they know. They need to know about the market. They need to know and keep talking with the professionals in respective industries. Like if you're developing securities market products, you need to know and talk to the securities market people very regularly so that they know what they think and understand whether what you are developing are, say, are getting old, and say as the market is changing, as the technology is growing fast. So we need to make sure that what we are developing by fintech is very updated, and we make sure that they are developing the rightful products that fit the industry needs. Generally, I'm very confident that there are still very big developments in fintech, or indeed, fintech is getting old-fashioned. We are more talking about tech-fin now, and the fintech should also explore further on how to cope with the real problems of the market and provide precise solutions like SaaS.
Right. So thank you, sir. Thank you for sharing this perspective from this, your point of view about the future of fintech industry. Because we have been talking to many of the giants, many of the startups itself, as to what they believe is the real need of the fintech industry, what is the real growth of the fintech industry. So that is, from your perspective, from Hong Kong, from Edit International Financial Group, how the fintech industry is going to grow. And thank you for sharing the time with us. Thank you for sharing all this insights with us. It has been really, exponentially great for us to understand how exactly Asian fintech industry is growing, how the main players of the Asia are working towards the growth of this fintech industry, the asset management, the fund management, current growth of the fund management, the current perils, the current problems the fund managers are facing. Thank you, sir. Thank you very much for sparing your time.
Thanks very much.